John Nadler, let's settle this once and for all. Does India's tax on gold really matter? They wear it, but most people are buying gold to invest in it.
Well, look, Greg, anytime we're talking about a third of physical global gold demand, things must matter because this is a country that basically already doubled its import duty on gold from 2 to 4% a year ago, and of course now on Monday to 6%. This hike is part of a package, really, that the government is trying to take measures to basically dampen gold appetites in India. And I think what happens here is, it matters less that they're trying to address the current account deficit or the fact that they want to unfreeze some of the existing 20,000 tons that are lying around Indian mattresses. The issue here is that the net demand was already down 28% in the year that ended September of last year. And this was a direct result of hikes in tariffs. Now, what's very interesting about India is the fact that up to 2004, they normally never bought more than about 5 tons of gold on Akshaya Tritiya. And the quadrupling or even almost tenfold increase in gold demand that happened after 2004 was largely a result of the legacy of these TV ads that the World Gold Council put into motion in India to stimulate appetite for gold. And of course, they created somewhat of a monster as far as the government of India is concerned.
Well, gold so far this year is only up around 1%. Meanwhile, platinum is up around 10%. Is it time to get on the platinum train, or you think these roles are going to reverse?
Well, look, if we look at historical data, platinum has been the front runner with vis-a-vis gold for quite some time. And the premium has averaged $200 to $400 above gold. I would remind your viewers that before the Lehman collapse in 2008, platinum was trading at more than $2,250 an ounce. Gold was still under $1,000 an ounce at the time. This basic situation in platinum has evolved to underscore the difficulties and the fundamentals that the metal is meeting. The latest moves, in fact, came basically on the heels of Anglo American announcing that it will suspend production at several mines in South Africa, and that such closures will result in another 400,000 ounces of lost production per year. So what we're looking at here is a metal that is 35 times rarer than gold. Gold is roughly 10 times more is produced on an annual basis than platinum. And we're looking at a conjunction of factors, a convergence of factors here, where the car industry globally is recovering very nicely just at a time when production is really tenuous out of South Africa. So we have, as a result of that, Citigroup basically upped its platinum price projection by almost 2% for the current year to about $1,700 per ounce average. To me, platinum is a decent, very, very decent buy at around the mid-1500s because we're approaching production costs right about there. But that said, it could be a nice trade to sell it somewhere north of 1750 to 1850. Even if we get a spike later on, we have to be cognizant of the fact that this is a volatile, tradable metal.